Looking for somewhere to copy trade that offers only the highest quality of certified traders vetted by a team committed to helping traders become successful? Diablo is that platform, offering rigorous risk management by setting maximum drawdowns for their platform's traders. As with real trading rooms, traders are followed by a person called risk managers during their incubation period, so there's no need to worry about what traders you follow on Diablo.io. So visit Diablo.io for more information on participating in their open beta.
This my two Satoshis. Who need 2 cents when they can get double from stacking Toshis? Yeah.
Welcome to my two Satoshis with Default. Come to you once again with another market analysis video. Picking up where we left off last week. Last time I was making a video, we were actually below this critical area of support. We were in the 27,000 area. I was way more under the impression that we would see, probably around like 20K. We got as low as 25, 350, and you started to, the bulls stepped up and pushed the price back within the support zone. And this is, very significant. This is actually the second time we've hit the zone. The last time it was last summer. We used it as support, bounced, made a newer high, and that has a lot of people to believe that we will, mimic that last summer price action, but I'm not as optimistic. And I'm going to show you why, looking at the larger time frame, starting off with the monthly. Last time we did pivot, we didn't have, this price action. You didn't have this type of support painted on your chart, and we are right now, we're in the middle of May, but right now we're actually below that critical support, around 35K. So, it's a thing that you have to be patient with and see how we close. But as of right now, it's not looking promising that we will close above that area. And one of the reasons why, when you look at the weekly time frame, the support was around the 31.6 area. We actually did close below that last week. And as you can see, we're having our 8th consecutive week of selling so far, just not strong price action. Even after, after the bulls stepped up and, tried to support the price, you're still getting a negative week. You were scrolling even further to like the 4 hour was really the only time frame you did have an advantage for the upside. I was pointing this out on my Twitter. We were developing bullish divergence from your low to your low to your lower low, and as well with your RSI. When you have these impulses to the downside and you develop bullish divergence, you want to be, breaking these previous peaks, and you're not even, at this point, you're not even above the previous peak when you had positive momentum. And that's very unfortunate, because if you don't get above that previous peak, you're developing right now is some hidden bearish divergence on the MACD on the 4 hour. You really have to get above this 31,700 area for me to start to feel a little bit more optimistic that we'll see higher prices. For your previous high, your previous peak to the low, we have hit the 236. Remember, I did a video when we bottomed out here back in January. I did a video on showing you, how to use your fibs from your high to your low, and where you can get potential targets where, you will hit certain fibs, and they could be areas where you would, could potentially roll over, sell off again. It's the same concept here. Using your last high to your new low, you could be seeing prices around 34K area, 150, or even a 50% fib. Last time we got to the 382 and rolled over. It could be the same, this time, but you could see anywhere from the 618. These are normal retraces where you could be, be just choppy price action, hit those fibs, and then lower lows in the future. Those are just areas that I'm paying attention to right now. And when you have a pattern that it has taken, over a year to develop, the likelihood that it will hit that target is very high. And this is a double top. And the target is the 12 to 14K region. So just keep that in mind when you're seeing people state certain things online or making videos when they themselves were saying this whole time that we weren't in a bear market, and now they're telling you the bear market's over. But going to the next asset, looking at Ethereum again, just crypto in general right now is just bearish. We broke this rising wedge pattern to the downside, used this 1917 area as support. You're bouncing off of the support, but there's just no advantage right now. That potential hidden bullish divergence is invalidated. Actually, it did play out somewhat, but now is just seeing more bearish price action. While bringing Ethereum up, I don't even really want to look at the USD pair. I was more looking at the BTC pair. I noted this a few times in my analysis, how we were consolidating after the impulse up, and that usually is bullish. But unfortunately, with the market conditions changing, we are actually about to confirm a lower high. If we break 0.0665 area, my targets will be around the 0.0448 area before you see any type of maybe positive price action. But right now you had this consolidation. You're breaking it, you're about to break it bearishly. That means, from the BTC pair, you're going to be seeing at least a 33% haircut. And if Bitcoin is losing another 10%, and this loses 33%, you're going to lose half your value potentially in Ethereum. So that's just something that you want to keep in mind when you're trading these these altcoins. They do have BTC pairs, and right now, one way you can gauge whether or not you should be in alts or not is looking at Bitcoin dominance. It's a way to gauge how strong Bitcoin is against all other cryptocurrencies. And I've been, keeping my eye on this, something I keep my eye on frequently when whether or not I'm going to trade, alts. The dominance has actually been consolidating. It's been consolidating in this range since last May. And right now it was kind of developing a descending triangle, about to break it bullishly on a weekly time scale. You actually did break it bullishly, and you're kind of backtesting that support. I've seen this play out to the upside before, back in, I believe it was 2018, 2019. Yeah, back here, you had a descending triangle and you broke bullishly, and Bitcoin overperformed alts around this time. I believe, back in this area, we did have, before we actually broke out, we had a nice alt run. But when this dominance starts to gain value, alts will lose tremendous a lot of value. One thing that does look promising, I was looking at earlier, was the dollar. Maybe the rally in Bitcoin will continue, because right now the dollar is losing strength. Going to the daily, something I've been watching was on the daily MACD. We were forming bearish divergence, and that divergence is starting to play out. And so you're starting to see weakness in the dollar. It's typically good for risk on assets, and you did have some bear divergence on your RSI as well. An example of that as of now is what I've been watching with the interest rates, the 10-year. I was pointing out how we did have bearish divergence forming on your interest rates on your 10-year. It did sell off. As of now, you are pivoting and you're maybe forming a higher low. Also, with that higher low, you're starting to develop hidden bullish divergence. And so this is something you could see with the dollar within, in a few weeks, where you do make a higher low and then you start to develop hidden bullish divergence. And it could lead to, breaking resistance in the future. If this keeps rallying, and if we do break this next resistance area around the 3.25 area, as I stated many times, it's really going to be bad for equities and risk-on assets, and you will be seeing interest rates at elevated areas, and that is not good for the overall market But that's what I'm seeing right now within the crypto space. Still not strong price action, still not really an advantage to the upside, just some sideways action. These bear markets tend to take a lot of time to play out. It's not going to end in one day or in 2 months, or just because somebody feels that this never happened before and so it won't ever happen. That's not how trading works. I just wanted to give you my the update what I'm seeing in these markets. And you can follow me on Twitter at all your mentions, or you can follow me on YouTube at Money versus Feelings. Until next time, peace.